Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at AbleSys. Welcome to the webinar, and we'll go over the different charts, take a look at the signals, and utilize the software the best way we can. So let's jump in and we'll go right at it. So we got a daily, weekly chart up here. Of course, we always use 2 time frames together. That's the guidance chart, which gives us a big advantage. And we have a daily, weekly here. It's just for a little longer term view for people, especially if like trade options or don't have any interest or don't want to or can't day trade. So that's perfectly fine. AbleTrend's going to be helpful, just as helpful for that too. So after, of course, a really big downtrend here, the key, of course, is having all 3 indicators agree. You know what? I am going to do. I should have did this already, but I'll do it again now. I want to put X's on the chart instead of dots for the higher time frame. The reason being, it's just it's easier for me to show everyone and to teach and to just show you the right, what we're looking for. And what we're looking for is a blue price bar, especially the first one. The first one, you always get a big blue dot in the middle. A small blue dot, which is a support point, hidden support point that our algorithm is able to see for us, and it's certainly going to help to block the price from going lower. And if both are blue, and here's the third, you have to have 3 indicators agree or it's no trade. That is not up for like a discussion, or is there any sidebars to that? No. It's 3 indicators, yes or no. That's cut and dry. And then, of course, you get the higher time frame, the big blue X. So you got blue bar, blue dot, small dot, and blue X. And the first time they all come together, you also happen to have the extra trend sig indicator that I just like to put on there just for a fourth confirmation. It's not necessary, but it certainly doesn't hurt. So you have to have triple confirmation, which is a blue price. The first time, the 3 agree. Blue price bar, blue small dot, blue X. The first time agree, and there it is. There's the first time those 3 agreed. Here was the first time they agreed on the sell signal. Obvious no trade zone there. This would also be a sell signal here. But just getting back to this here, and I'll zoom in a little closer, we're going to put our stop loss, put it like 1 tick if you're doing futures, 1 penny, a couple pennies, just slightly below, just a tick or 2 below this bottom blue price bar, the first blue price bar. This is IBM, by the way, daily, weekly. It's some really good daily, weekly charts. Obviously, it's been a really good month here in January, and the software picked it up quite nicely. And you can see now there's 3 exit signals because anybody using AbleTrend 3 weeks ago, would have purchased this or bought this using AbleTrend signal at 120. You're at 134 and change today. So $14 per share. That's a heck of a nice trade in 3 weeks, especially if you got a call option on that one. Now you're talking some real money. Now there's 3 exit rules, and again, it's the same. This is the same chart. It's the same rules. It's the same colors and dots. No matter if we're trading crude oil or mini S&P, anything, grains, currencies, it's exactly the same rules. Same chart, everything's the same. And we're either going to get out, especially on the intraday, we like the 3 green bar exit because, that's more for in and out, scalping, getting in and out more quickly. And you can certainly use that for the daily, weekly charts also. For sure, we're going to get out if the bar turns to red, because red would be the complete opposite of blue. Red means sell, downtrend. Blue means buy, uptrend. Or if the prices go under the blue dots. Now, once these dots catch up, here's our stop loss, remember, right there. Once the dots catch up, now, for example, when the price is here, there's the dot right below it. We're going to put it at the previous lower small blue dot. Second step down, if you want to call it. To me, it looks like steps. Second step under the price. For example, here's the price right now. There's the blue dot below it. There's where our stop loss would be, right around 130, which is really sweet because we got in at 120. So that's the worst we can do. Making $10 a share is quite nice if that's the worst we can do. Had some really good daily, weekly charts here. All I did was type BA, which is Boeing, on on the keyboard, that box popped up, and I clicked one frame. That's all I did. I just clicked the symbol, which is BA for Boeing. The box popped up in the middle while I was typing. Didn't click anything, just started typing. And then I clicked one frame. And there's your triple confirmation. First time all three come together right there. About the same time as the IBM trade, actually. There's your third green bar. If you'd like to more, a little bit more of a swing trader, in and out quickly, perfectly fine. You're in at 330, a little under, but I'll call it 330, and we're out at 360. I mean, that's really nice. It's $30 a share. You can always get right back in again on a sweet spot. That's not a true sweet spot, because a true sweet spot is when any one of the bars, green or blue, come down, touch the blue dots below, and then you get in on the next blue, or you get in on a blue bar. I mean, like, let's say it's a green bar. Often it's a green bar that touches the blue dot, and then it starts to pop up again, and then it turns back to blue. That would be a true textbook sweet spot, when one of the bars touches the small blue dot, and of course the opposite would be true for a sell signal. And then of course, hey, we're still in it right now at 385, in at 330. That's really sweet there. That's 55 points. So we're talking some real money there now. And let's jump in crude oil. A lot of people have been asking me, what's a good market to trade, early in the morning, or I'm up real early, especially if you're on the East Coast. I'm up real early, and I like to maybe trade a little bit. Well, there's two things you can do. I would take a look at crude oil. And another question I get asked a lot is, how about trading the E-mini S&P after hours? Maybe you're in another country and it's more convenient for you, or it's just works out late at night, or you're a person who's up in the middle of the night, whatever. You need to use a 3-minute, 9-minute chart if you're trading the E-minis after hours. Normal U.S. hours is 9:30 to 4 o'clock Eastern time, which is 6:30 to 1 Pacific. The normal stock market hours, 6.5 hours a day. That's the normal session. However, if you did, and I don't like that, be extra cautious, because there's very low volume. The bid and ask spread, it can be a little wider. It's kind of flat, sometimes for a long time, sometimes hours at a time. So, it's not the greatest. However, some people like it, great. No, I'm not telling you not to do it. It's perfectly fine to do it. But go to a 3-minute, 9-minute chart, because it doesn't move much. So you need to go to a higher time frame. That's for the E-minis. Crude oil, 1 minute, 3 minute, well, that gets rocking usually about 7 o'clock Eastern in the morning. But you can see here, I mean, this is just oh wow, I mean, this is beautiful. I mean, there's your triple confirmation. Let me make it crosses again. There's your triple confirmation. I like to make it crosses. It makes it easier for me to explain. And again, we need to have, it's the first time you get all three indicators agree. And let me get back to that there, right here. And that was just up and away from there. Now, you had a couple split spots here where you had the 3 green bars. Stop loss, remember, bottom of that first blue bar. Again, a tick below that, just a tiny bit. A penny, a point, a tick, whatever you like to call it, no matter what you're trading. But you did have some, I mean, there's your classic sweet spot. There's that textbook sweet spot I was talking about. See how the prices come back down? The green bar touches the blue dots right there, bounces off of it like you just walked into a ball against a wall, and when it goes from green back to blue, oh, that's nice. Stop loss is right there, so it's nice and close by, like 5 cents away, real nice stop. Green bar, because on the sweet spot, you put your stop loss on the previous lower blue dots. Blue bar, blue dot, blue X, I mean, up and away it goes. That was a home run there today. That worked out nice. A bunch of times you could have even gotten in or out. No trade zone. I'm losing trade there. It was only about 3 cents, but, certainly going to be losing trades. That I can guarantee you. Hold 1 second. Just stay with me. Okay, I'm back. And usually when you get a really big move, and I'll show that also on the NQ chart, the same thing was this morning. Had a really, really super huge move in the morning, or a really great trade. And just keep in mind, because normally when you get that big move, and you get like one a day on average in the E-minis, NQ and ES, usually after a big move, you get this. You get choppy sideways because the market has to digest it. Very rare does it go like straight up or straight down. It's just very rare. Usually after a really big move, and like you had here this morning, a really, really great trade there, kind of get a little choppy sideways. However, no trade, no trade, no trade. That's the beauty of these no trade zones. They just keep us out of so much trouble. Not going to be perfect, but they keep you out of so much trouble that even when you get losses, it's very small losses. You've got to take some risk in the trading business. And again, you're putting your stop loss on the bottom of the blue bars or the top of the red bar, either way. There's the first time you had the triple confirmation right here. Stop loss, you don't have to worry about that's another thing. You don't have to worry about how far the price is from the red dots or the blue dots when we're going long anymore. Stop loss goes on the top of that red bar, again, one tick away, and look at this one here. I mean, that's a mega home run right there. That's a serious trade, big time money right there. That worked out nice. There's your perfect sweet spot because you had 3 green bars. There's your perfect sweet spot to get right back in again. There's the pullback, back up to the red dots. Or go from green to red, down and away it goes. It's worked out real nice. And if you're the quick scalping type of trader, using the 3-bar strategy, nothing wrong with that. You just kind of inching away at it. Anybody who's likes to stay in trades a little bit longer because you have the red dots above, that means you're short. You're in a downtrend. Boy, then you could really, as it turned out, you really hit a home run there. Mini NASDAQ here today, perfect triple confirmation trade right there. Price breaks above resistance. I like when that happens. Clearly way above it. Stop loss on the bottom of the blue bar. About 9:40, for about 15 minutes after the market opened. And that was a really, really nice trade. There's your exit if you're using the 3 green bar exit. That was 20 points. That was really nice. 20 points in like 20 minutes. That's a $400 trade per contract. And then you're right back in again. There's your perfect sweet spot. I mean, absolutely perfect. Stop loss is right there. It's only about 8-point risk. Up and away it goes. There's your 3rd green bar there. You nail another 20 points. It's actually 25 points. I mean, first 2 trades of the day plus 45 points. Boy, does that take the pressure off the rest of the day. Makes you make better decisions also when you know you're going to have a winning day right off the bat. Wish every day could be like that, but nobody can control the market. But then after a big move, as I mentioned, you normally kind of has that little sideways action, and that's okay. We gave back about 3 or 4 points here. Same thing here. Actually, there's only about 2 points there because it went under that first blue bar where we had our stop loss. And then up and away from there. This one is a tough one to get in right there because of the distance there from the dots. And if it was the first time we had the triple confirmation, then you're in right away. Nothing to think about. But anybody with a little guts on this trade right over here would have gotten in closer to that. That was a little gutsy move, so certainly can understand missing that one. It shot up really fast. It turns out it worked out great, but looking at that live in real time, and that's what we're all about, real time, serious trading. That made it tough from there. However, remember 12:30 to 2 o'clock, we called the dead zone Eastern time. We called the dead zone. Not a big fan of trading during this time, and there's a perfect reason why. As it turns out, there were a couple small winners and losers, but overall would have definitely gave back a little bit of money there because between 12:30 and 2 Eastern, there's going to be some days it's going to work out great. You're going to kick yourself. However, we did the study and went back thousands of trades, and you broke even. That was the best you can do over the long run. If you did it every day, just traded from 12:30 to 2 o'clock, you broke even. So if your odds are saying you're going to break even, and again, there'll be some days that there'll be nice winners, but if the odds, the general consensus, or the stats say the odds are you're only going to break even, well, I'm not risking my money to break even. That's for sure. I mean, if that's the best I can do, obviously, don't bother. This is a valid trade right there. Perfect triple confirmation trade right there. Lost about 2 points. That's the beauty of putting the stop losses now on the bottom of the blue bar and the top of the red bar. I mean, that's the beauty of it. Your stops are so much tighter. I mean, that's great. It's just so much less money at risk. And this was a really good trade here, right at 3 o'clock Eastern, 1 hour before the market closes, which is 2 Central, 1 Mountain, 12 Pacific. Perfect triple confirmation right there. Stop loss at the top of the red bar. And that was a beauty right there, because there's your third green bar exit. You certainly don't want to give back. I mean, there's going to be some give back, but when it starts chugging higher right there, you definitely want to make sure you're out on that third green bar there. That one worked out nice. That was pretty sweet right there. That was about 14 points. Actually, a little more than that, but I always knock a few points off the winners. So that was about 14 points. So that worked out really, really sweet. Then you did have another valid trade right here, which we're going to lose about 3 points on that trade, but certainly don't mind that after you're just coming off a 14-point winner. And then a little late in the day, so certainly could understand if you didn't take that one. That's for sure. It was like 10 minutes, 10 to 4 here. But that's a valid trade. Just want you to recognize it. Certainly if that was the middle of the day or in the morning, that would be another valid trade. Turned out well. Then out over here, picked up another 4 or 5 points. But I'm not even going to count that because it was late in the day. However, technically speaking, it's a valid trade. So good stuff there. But that's how we use it. Always the same colors and dots. It's always the same rules. Nothing changes. Although I shouldn't say that, because we made it better by tightening up those stops at the top of the red bar and bottom of the blue, especially when the first time you have all 3 indicators are great. So always here to help. I hope that this was helpful. Thanks for being here, everyone. Have a good night.